So what we wanted to note here was that there's a couple of key trends that we're seeing. The first is active management, that based on the perch that VX and Index One sit on. If you find good active managers, you can consistently see alpha, and we've seen that, as Chris was just referencing. The second point is beware, not beware, but be aware of 2022. This is because we had such strong performance and very mild recoveries that we always want to be prepared for the down 25% maximum drawdown in the markets. The other thing is we've consistently seen over the last 3 or 4 years these 4 to 6 month runs. So as we were both just alluding to, we might see like international and small and mid cap do well in the first half of the year, and then we'll see large cap and growth do better in the second half of the year, or vice versa. We've not seen a year where a category is sort of leads the year from start to finish. And every year for the last 4 or 5 years, we've seen rotation. So we think that's really important to be aware of. And it's a good time to think about rebalancing or readjusting a portfolio after we've had one of these 4 to 6 month runs. Fixed income, we think, is another major theme. We had a 30-year bull market in fixed income. Starting with COVID, in the tail end of COVID, we've been in a bear market for fixed income for about the last 5 years. If you really look at what your return is on the ag for the last 4 or 5 years, you average about 1%. And by all accounts, it's going to be a hawkish Fed, and the likelihood of interest rates going up is real. So we think that if you're going to be in fixed income, you want to have risk management in place, and you want to have active management in place. The fifth point, diversification. Even though growth has been the strong winner over the last 4 years, other categories have had their moments, and it's really paid investors to diversify because it lowers your overall risk and builds out a much better portfolio. And then we always like to talk about growth and value. Year to date, VTV is outperforming growth 13% to 7% relative to an S&P SPY plus 9%. But over the last 5 years, growth is up 88 and value is up 60. So we definitely view the world in this: should I be in growth or should I be more defensive? At the moment, all three of these ETFs have had a very good beginning to this year.